Hi, this is Am here with the Leap Day edition of the Bulletin Board Heroes here at Zac's Traders Cafe. It is Thursday, the 29th of February. Starting off with the FTSE 100, which is right on neutral RSI, right in the middle of the range, and right on the, well, just above the 50-day moving average, around 76.25. Above that, we're hoping for a move to the top of that rising trend channel from August up to 78.30 by the end of next month. If we do fall down or fall over, then the 200-day line, 75.40, is the favoured destination, although not much more than that. The FTSE seems to be as dead as a dodo. Moving along to the DAX, which hopefully is not in that kind of state. Here you can see that it's nearly touched our red September resistance line projection, 17,700. Above that, we're looking for this market to head up as high as 18,400 by the end of next month. On the downside, initial February resistance around the 17,400 area would hopefully be support. Otherwise, it's the top of that gap, 17,300. Ideally, whatever happens, we stay within that rising trend channel from October, the floor of which is currently at 17,200. Moving along to the Dow, and here you can see that we're testing the floor of that October rising trend channel that it's got. Clearly, there is support there at that uptrend line from back in the autumn. Below that, the 50-day line, 38,000, looks like a natural support area for this market if there is a dip. Otherwise, we've got the prospect of March and April giving us a 40,000 plus target there, 41,000 at the top of that channel there from October. But at the moment, just hoping that we stay above the floor of that channel. On to Bitcoin, where the hope was that this market would hit $60,000 by the end of next month. It's managed to do that by the end of, right at the end of this month, in fact. And I wasn't really looking to come up with a higher target, but obviously the markets forced me into it. Here you can see that we've had that rising trend channel there from back in August. The current situation is that we've hit our optimistic red line there, which was up to the 60,000 area. Current situation is that we've hit another resistance line there from back in September. The overall pattern, obviously, apart from the record highs, would be to hit the line that I'm drawing at the moment, which is currently heading towards 70,000. Hopefully that's by the end of next month, and that is a May resistance line projection. So overall, above 60,000, looking for 70,000 by the end of March on Bitcoin. On to gold, which I presume will not be quite as spectacular, given that Bitcoin has been the gold killer in recent years. Here we've got that resistance line there, the red one there from back in December. That's around 2055. We want to break that to give us 2100 over the next couple of weeks, and by the end of next month up to as high as 2180. But has to be admitted, the price action there very dull. On the downside, the floor of the channel there from last March is at 1997, let's say, and that is the support that we're looking for if we have to have a fourth near-term dip towards the $2,000 area. Moving along to the stocks, and Aminex is first on the roster. I haven't looked at this for ages, but the company had an RNS today, which was very nice. Bear trap gap reversal, one of our favorite setups, and breaking that line of resistance from October as well, around 0.79. The longer we stay above that line, the greater the chance of a move, maybe in the next month up to 1.2 or 1.3 pence. But obviously, this is not the most heavily traded of stocks, and things may be a bit jumpy in both directions. The story of the day is obviously from Avacta and its 50 pence fundraise. Here we had the situation where we had that resistance line there from December. It looked like it would always be a tall order for the market to break that. I think the last time we looked at that line was around 95. And you can see really that there wasn't that much warning in terms of the chart that there was going to be a placing apart from that overshoot that we had below the 75 pence level late yesterday. Current situation is that the RSI is at 18, which is basically where it was, or the lowest it's been in the recent past. So probably the best that can be said here is that above 50 pence, we're looking for the gap to be filled up to 67 or 68 pence over the next few weeks. But obviously that is a developing situation. Situation which has not been great over the last few years is Canadian Overseas. Wasn't expecting to look at this chart again, but the shares are up 55%, so one has to give the stock a chance. Here we may have a gap close buy signal, bear trap gap reversal buy signal. If we get an end of day close through 0.6 or 0.67 above that, then we're looking for the shares to get up to 0.1 pence. But at the moment, that area 0.1, 0.11 is about the best that we have on offer, and we need to see the shares stay above the floor of the gap there at 0.05 for anybody who's into that kind of micro small cap situation. A better situation perhaps is, or much better, is DG Innovate, where we've got this rising trend channel there from December, unfilled gap to the upside then, and we've never closed that gap. Recent support coming in at 0.15. Above that, we're looking for the shares to perhaps head up to 0.3 pence and the top of that rising formation by the end of next month. Be cautious, you wait for an end of day close through the 50-day line at 0.19 before pressing the buy button. RSI has already pushed through neutral 50 at 53. That does suggest that we are ready to go. Onto Hornby, where I was heckled the other day for putting lines in spurious places, but here we've got a situation where the second target there, around 36 pence, has been delivered. Third target there at 46, hopefully over the next week or two, certainly by the end of next month. But as you can see, the shares were back in the 70 pence region at the end of 2020, and the way things are going, they may retest those areas, especially while we're above the 36 pence level, that resistance line target, and ideally we stay on the right side of 30 pence, which was resistance on the way down. Good to see the next stock coming back with a vengeance, which is GCM Resources. Here we've broken through a rising 50-day moving average. We've closed that gap there at 2.65 pence, and while we're above 2.65, looking for up to 4.75 pence by the end of next month, which hopefully it will be able to do that rather quicker than that time frame. Moving on to another company which has raised money today, and we're just sort of looking through where the shares may have support. There's an uptrend line there on Hemogenyx from back in June. That's around the 1.9 pence level, so ideally we stay above that. It's interesting, obviously, that the shares fell so far and so fast ahead of today's placing. Maybe one or two people guessed it was on its way. Below 1.9, then there's obviously the next level down around the 1.5 pence level, but hopefully it won't come to that. On to another stock which is reviving itself rather surprisingly at the moment. Iconic Labs, a sort of bear's favorite. Here you can see that we've broken above the 50-day moving average for the first time since August last year, which is quite an achievement. And the view now is that we can get back above, or remain back above, the resistance on the way down 4.75 pence. We could head as high as 8 pence as a best case scenario, although obviously the shares have come up a long way in a short time on that particular situation. Another bombed out situation which is reversing nicely is Mast Energy, and here we've broken a resistance line there, falling wedge basically from December. That was around 0.4 pence. Above the 50-day line at 0.46, we're looking for as much as a penny by the end of next month to fill that gap and to head up to the top of that falling trend channel from July. We've had lots of fireworks at Powerhouse Energy in recent days, especially yesterday with the spike towards 1.2 or 1.3 pence. 1.3, 1.4 remains the best case scenario target, while we remain above the floor of the old August gap there, so call that 0.67. Above 0.67, the bull argument still on course, and ideally we'd like to see the shares close above the old August resistance at 0.83 to then deliver the scenario of 1.3, 1.4 on the upside. But upside, we're half full rather than half empty while we're above 0.67. On to Renalytix, which I've been hoping that we'll have a turnaround from the old target there around 24, 25 pence. Above 25 pence, we're looking for a return to the 50 pence area. Resistance on the way down, and also that November resistance line projection as well. On to the last two. First one is Verici, and here you can see that shares making nice progress with the sort of the crossing of the 50 and 200-day lines. I'm not sure whether it's a golden cross or not, but we've broken that line of resistance from back in May and are heading up hopefully to the top of that rising trend channel from the beginning of last year, as high as 20 pence as soon as the end of next month. I'd like to see the shares remain above 11 pence in the meantime. Finish off with Xtract, where the market still begrudges the company any rising share price, even though it came up with its $15 million deal. Here we've got a rising 50-day line, and hopefully we'll get an end of day close above that at 1.07. Looking for 1.4 pence by the end of next month, helped along by that uptrend line in the RSI window and the now rising 50-day moving average. That's it for me today. More updates tomorrow.